All right, everybody. So don't do this if you want to buy a home in 2023 and beyond. So, guys, today I want to talk about the proper way to get pre-approved, the difference between a pre-approval, a pre-qualification, and even getting fully underwritten up front, when you should do that, why you should do that, and it's a good idea. Hey, everybody, welcome back. I'm Aaron DeHart. And if you haven't already, please give us a like and go ahead and hit that subscribe button so you can follow and keep you informed whenever we come out with some new videos on the proper lending process and on real estate in general. This whole channel is designed as an educational channel to give you proper information so that you can properly prepare to buy a home and when to prepare to do that in 2023 and beyond. I'm all about teaching normal everyday people like myself the proper ways to purchase real estate, go about the home buying process, and also the home loan process. So when you are ready to buy, it eliminates as much stress as possible. All right, guys, so let's get right into it today. So the reason I wanted to do this video is recently I've been getting a lot of inquiries about people wanting to look at possibly buying their first home or maybe even getting a second home or dabbling into the investment property profiles to help build wealth. And as you know, if you follow my channel, I am a firm believer in using real estate to develop long-term wealth and also generational wealth. If you go back and follow and research and study some of the most successful and wealthiest people throughout the years, you will find out that they all invested in real estate. And we only have so much real estate to go around, so that's why it's so important. So what I wanted to do was create this channel where I can do it in an educational platform with no BS, straight shooting, and really show people how to properly prepare to do that and not have it be in a salesy way. I don't really consider myself a salesperson at all. I'm an educator, and I believe that by paying it forward and putting a lot of proper education out there, what to look out for, I just believe that it's going to come back to me tenfold and that people are going to trust me when it comes time to be able to do their home loan for them. All right, so let's get right into it. So today I want to really concentrate on those three things: a pre-qual, a pre-approval, and then getting fully underwritten up front, why you should do those things and why not. So a lot of times recently, this past few weeks, we're getting inquiries and people want to rush through the process, and I don't understand why. And one of the biggest things is not treating your pre-approval process like you're going through a fast food drive-through. Guys, at the end of the day, it is probably, and I tell this to my clients, unless you win the lottery and call me up and say, Aaron, you're not going to believe it, I won $50 million, I'm going to go buy a $10 million yacht. We're responsible for managing and helping to quarterback probably the largest financial transaction you're ever going to do in your lifetime. So it's important to really front load that and make sure that it's done quickly. Now, here's the thing, guys. Some pre-approvals, no kidding, we can literally bust them out in a couple of hours. If someone's a salaried position, they've got a good credit score, very limited debt, we know exactly where their down payment's coming from, etc. That's something we can turn around in a couple hours for you. What I always like to tell my clients and everyone else involved in the purchase process is every single loan's different. It's literally like a snowflake. If you were buying 5 houses all at the same time and going through the loan process on each one of those separate 5 houses all at the same time, every single one would go dramatically different. So that's why it's important to properly be pre-approved up front. In some cases, we might have someone that's self-employed, they have very complicated tax returns, and they might have some multiple investment properties that we have to get rental income analysis on. And here's the thing, if we're missing just a few pages of the necessary documents that we need in order to do that pre-approval properly, it's a dead stop. We literally cannot continue and figure out self-employed income if we're stopping with that. All right, so let's get right into it, guys. So what is the difference between a pre-qual and a pre-approval and then a fully underwritten? So a pre-qual is, you might call, have a conversation with the lender. They may or may not pull your credit, but they're basically, it's just a conversation of, hey, here's what I think my credit score is, or I might have looked at it through Credit Karma. I have a $400 a month car payment, a $75 a month Visa payment, and a $50 American Express payment. And I make this much money a month and I'm salaried. Cool. Based on the information you told me, you can get a loan for this much. Go ahead and go out shopping. Now, I don't know about you, but that doesn't sound very thorough. Personally, we don't believe in doing pre-quals at all, and here's why. So many problems happen, or so many loans that we have to rescue on a monthly basis are literally things that could have been solved in the first 15 to 20 minutes of having that conversation with someone, okay? So you want to get all your documents properly over to the lender. For your income, if you're W-2, you want your last 2 years W-2s, your most recent 30 days of pay stubs, and your most recent last 2 years of tax returns, all pages. For your assets, you want your most recent 2 months of any bank statements or asset accounts that you're going to use for either reserves or a down payment. Or if you're using any type of retirement accounts, 401k, anything of that nature, we want your most recent quarter. We're also going to do a full credit report on you. I believe in analyzing the credit, going over it with my client. Did you know that nearly 7 out of 10 credit reports have old information, duplicate items on there, or just things that aren't supposed to be on there at all? Nearly 70%. So there could be some hiccups with that we want to go over with that. And we want to make sure that we're staying within your budget. A lot of times people think they can afford something because they're making this amount of income. However, there might only be certain incomes that we can use. For example, bonus income and overtime income. You have to have a 2-year history of receiving that income in order for us to use it for qualifying. So pre-qual is just a quick little blah, 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 not worth the paper it's written on. Pre-approval, we're actually getting those documents from you. We're running credit, and we're also going to run you through what's called an automated underwriting system called DU for desktop underwriter or LP for loan prospector. We run them through both with that. And what that is, that's a computer program that has an algorithm. It looks at your credit score, it looks at your debt, looks at how much money you have in your assets, your overall income picture, and it basically spits us out an automated approval. And as long as I didn't fudge any numbers in there and everything matches up with what your pay stubs and everything else is, then it's going to match up with that approval. Now, a lot of times we will even go a step further, especially if it's a competitive market, and we're going to get you what's called fully TBD underwritten approval, meaning to be determined. That just means to be determined on the property. If we do it that way, one, it makes you a lot more competitive when you're going to present your offer to the sellers to buy their house. And it's an easy conversation for me to have with the agent that represents the sellers and say, hey, this has already been reviewed and approved by a human being underwriter, aka the judge, and we've shown them your income, we've shown where the down payments come from, and they've signed off on everything. So all we need to do is get an appraisal on the property, any kind of necessary inspections that are done, what's called a prelim, which is the actual legal description of the property that we get from a third-party title company, and it allows us to close the loan a lot much more faster than if we're normally working backwards. Typically, when we do that, we can have those loans closed in like 20, 21 days, okay? We also want to do that if we've got somebody that's got complicated income. For example, someone might be self-employed and they've got a lot of moving different parts. They might have income coming in from this channel, income coming in from this channel. And a lot of times, I want to make sure that we're correct, that we calculated it correct. So we'll actually package that up, send it to underwriting, and say, hey, do you agree with how we did this income calculations? Are we missing anything? Did I accidentally miss something that should have been added back in or subtracted, et cetera, et cetera? And just front loading it that way makes the approval process a lot less stressful on you, I promise. Here's the thing, guys. All that stuff that we're asking for up front is going to be required to get your loan to the finish line anyways. I promise you. I just believe in front loading it, doing a little bit more extra work up front, and it literally saves a ton of time when we're in the process, okay? If you have complicated income, like you get a lot of overtime or shift differentials, our firefighters, our police officers, our nurses that we work with, things of that nature, if they've got some complicated income, we're even going to get what's called a verification of employment or a written verification of employment from your employer up front. Because I want that income actually broken out so I can see what it is that we're utilizing, because that's what the underwriter's going to use. So that's why it's important. Please do not rush your pre-approval process. Make sure you're asking questions. Make sure your lender's asking you questions. They should be asking you, hey, how long have you been getting overtime? Has it been 2 years? Awesome. I see you've been getting quarterly bonuses. Have you been getting them for at least the last 2 years? Guys, those are super important questions to ask. Make sure you're understanding what your debt to income ratio is. Your lender should be able to tell you that and explain that to you in detail, what it is, and you should be able to understand it. So that's it, guys. That's the difference between a pre-qual, a pre-approval, and a fully underwritten. Please don't just do a pre-qual. You're asking for a lot of mistakes, a lot of headaches. Those are the phone calls we get all the time at the 11th hour. A loan's supposed to be closing in a week, and it's messed up, and we have to try and come in and save it. And literally, guys, 90% of the time, it's something that could have been resolved or even discovered in the first 15 to 20 minutes of even having that conversation. So, guys, thanks for watching. If you haven't already, give us a like, give us a subscribe, give a comment down below, and we'll talk to you soon. We'll see you next week. Thanks for watching, everybody. Have a wonderful day. Take care.